There's a lot of debate online about the difference between a break of structure and a change of character. So today, we're going to continue digging into market structure. Most importantly, we'll go over the common mistakes traders make, and we'll figure out the key differences, how each one forms, and the main rules for identifying them. These fundamentals are crucial if you want to understand which phase of the market you're in. To get the most out of this video, make sure you've watched the previous episode on structure. The link is in the description. Before we start, I want to remind you that in my Telegram, I regularly share my thoughts on trading. You'll find plenty of smart money signals there, along with theoretical lessons on the strategy. I post lots of tips and tricks that never make it to YouTube. Alright, as you know, a BOS is simply a break of structure, a structural break in either direction. Let's look at an example in an uptrend. Price pushes upward, then pulls back. That gives us a swing high at the top and a swing low at the bottom. We mark them with green lines. Now we know that any break above or below these levels counts as a break of structure, a BOS. Since we're in an uptrend, we're following the movement upward. We get another push up and another correction. Again, we mark the new swings with green lines. No matter where these levels get broken, that's where a new BOS forms, and so on. I think you get the idea. Now let's talk about another way to identify a BOS. There are two main methods. The first one is breaking a swing high or low by the wicks. The moment price pierces through the swing level, we can consider it a break of structure. Remember how a swing high forms. It's created by 3 candles. A swing high is formed by 1 candle in the middle and 1 candle on each side. In most cases, clearer and more meaningful extremes form with 5 candles. The logic is the same, but now you have 2 candles on each side. For a swing high, you have the middle candle at the top and 2 candles on the left and right. For a swing low, everything is mirrored. All of this was explained in the previous video on structure. So, in the first method, when we look at wick breaks, we see that after a swing high forms and we get a pullback, any wick that breaks above that level gives us a new BOS. Then we mark the next levels where another BOS would form if price breaks them. We see a wick break. That area is our new BOS. Wick breaks are one of the most popular ways to identify a break of structure. The second method, we only count a BOS when a candle body closes above or below the body of the swing high. Same example. Here's our significant swing high with 2 candles on each side. We mark it based on the candle bodies, and once we get a candle close above it, we can say a new BOS has formed. What matters is that the previous swing low is right at this point. A candle body closing below that level would also signal a new BOS, and we can clearly see that this other point has no impact on our structure analysis and cannot be considered a BOS in any way. Later on, we see a valid break of structure once a candle closes above that closing price. Let's switch to the chart to reinforce this. We'll build an uptrend using wick-based structure. In other words, any wick that breaks our swing high gives us a BOS. We plot the final zigzags of the previous downtrend. Then we start marking our swing highs and swing lows with horizontal lines. These will be our potential BOS levels. In an uptrend, as you can see, new higher highs and higher lows form. That's why a BOS only appears when price breaks a swing high. When price breaks the other way, we get a new concept, CHOCH. CHOCH stands for change of character, meaning a shift in market sentiment. In simple terms, it's a break of structure in the opposite direction, against the prevailing trend. Just like with a BOS, you can identify us using wicks or candle bodies, but most traders focus on wick breaks. So the moment price takes out the last higher low, we can say a CHOCH has formed. After this shift in market sentiment, we look for a pullback, and inside that correction we search for our entry points, the ones we discussed in the Smart Money video. The link is in the description. There's also a new video coming soon about the system's full potential, specifically the different types of entry setups in our priority trading scenarios. So subscribe to the channel and hit the notification bell so you don't miss it. So what's the fundamental difference? A lot of people online claim that a BOS and a CHOCH are the same thing. In a way, they're right, but not entirely. Every break of structure in either direction can be considered a BOS, but only a break of structure in the opposite direction of the main trend qualifies as a CHOCH. In other words, every CHOCH is a BOS, but not every BOS is a CHOCH. On many traders' charts, you'll even see the notation CHOCH/BOS to mark this shift in sentiment, which is perfectly valid. Ultimately, it doesn't matter whether you label the zone as a CHOCH or a BOS. What matters is that your structural logic stays consistent and your trading remains profitable. There's also the concept of a flip and another abbreviation, confirm. Essentially, this is the next or sometimes the very first BOS that forms after a CHOCH. That's the move that confirms the trend reversal. Let's switch to a real chart to reinforce what a CHOCH looks like. Continuing with our analysis, after the CHOCH forms, price moves into a correction. We could have entered on a lower time frame from an order block. From here, we keep plotting our swing highs and swing lows step by step to spot the next break of structure and the area where the next CHOCH might form. As you can see, it's actually pretty simple once you understand the theory. Again, practice this on your own. Spend time refining the skill of marking structure breaks and the points where market sentiment shifts. This is a crucial skill. It helps you trade with the trend, which increases your win rate and improves your risk-to-reward ratio. Now let's break down the main mistakes traders make when identifying a CHOCH. There are two big ones. The first mistake is looking for a CHOCH in a place where a valid structure simply cannot exist. Let's examine this section of the chart. I often see beginners marking it something like this, but this is a huge mistake. For a BOS or a CHOCH to form, price must break a swing high above or a swing low below. Until that happens, nothing inside that range can be considered structural. Now let's move to a real chart. On the 45-minute time frame of USD/CHF, we'll draw our zigzags. Once we do, we can clearly see that the distance between the last swing high and swing low is massive. We mark them with horizontal lines, and everything in between cannot be used for any kind of structural mapping. The CHOCH and BOS flip marked in this area are incorrect. On the other hand, if we switch to a lower time frame, say the 15-minute, and look at the exact same price action, we can see intermediate swing highs and swing lows. Based on those, we can build valid structure. Let's move to another section of the chart. A similar situation appears here. After the news release, price moved impulsively, and once again the distance between the swing high and swing low is very large. In this case, there isn't even a hint of an intermediate swing on the lower time frame. So here, we simply traded with the trend. As price approached the order block, equal lows formed. Then we got a bounce directly from the order block, and price moved up to take out our swing high. The second mistake is misidentifying the exact location of a CHOCH. This usually happens when we have a lot of swing points. Here's an example. We can see that a shift in market sentiment has likely occurred, but where exactly? On this part of the chart, it's unclear, and many beginners get confused. But to identify it correctly, all you need to do is look at the structure to the left. So let's mark out all the breaks of structure and the most recent zigzags. To figure out which low actually gets broken and signals a CHOCH, we look closely at the price action. Here's the answer. After breaking the fourth low from the top, a shift in market sentiment occurred. Let's look at an example on a real chart. Here's the section where, looking back, we can clearly see the reversal. But how do we pinpoint the CHOCH? We need to step back in history and observe how the price moved. We mark the most recent zigzags and BOS levels to identify where the CHOCH actually forms. Then we find the true location. This might seem obvious, but identifying a CHOCH is crucial to avoid mistakes on entry. Many beginners think a reversal has started, when in fact the trend is still continuing. If you found this helpful, leave a like, subscribe, and hit the notification bell. It really helps the channel grow. Any questions? Drop them in the comments. And don't forget to check out my Telegram channel.